Global markets drop sharply as Trump reignites fears of a trade war over Greenland. Global markets plunged on Tuesday after President Donald Trump reignited fears of a U.S. trade war with the European Union, America's largest trading partner. The president showed no signs of backing off his threat on Saturday to hit 7 EU countries and the UK with new tariffs unless they supported his push for U.S. control of Greenland. Asked if he would be willing to use force to seize the Danish island territory, Trump replied, "No comment." In a brief telephone interview with NBC News on Monday, S&P 500 futures sold off by around 1.6%, while Nasdaq 100 futures plunged 2% ahead of the market's open. Futures for the Dow Jones Industrial Average indicated that the index was set to drop more than 700 points at the opening bell. U.S. markets had been closed Monday. If the drop in S&P futures carried over to the regular trading session, the index's gains for the year so far would be erased. Investors also sold off U.S. government bonds, driving up interest rates. Rising returns on U.S. Treasuries usually translate into higher mortgage rates and interest on new personal loans. Markets in Europe also saw sharp drops for the second day in a row Tuesday. Germany's benchmark DAX index dropped 1.7%, Britain's FTSE 100 fell 1.1%, and Italy's FTSE MIB slid 1.5%. The SDOXX Europe 600, Europe's equivalent to the S&P 500, tumbled 1.3%, with all but a handful of the hundreds of stocks on that index in the red. The CBOE Volatility Index, also known as Wall Street's fear gauge, rose to its highest level since mid to November on the blizzard of risks facing investors. Precious metals, viewed as safe haven assets in times of turmoil, also rose to record highs. Gold and silver both jumped more than 1%. The ICE U.S. Dollar Index, a measure of the dollar's strength against international currencies, dropped 1% in early trading, putting it on course for its worst day since April, when Trump announced his reciprocal tariff agenda and sparked a sell-to-off in U.S. equities and bonds. Trump threatened even more tariffs late Monday as he boarded Air Force One in Florida. Asked about French President Emmanuel Macron's reported plan to turn down Trump's invitation to join a board of peace that would initially focus on Gaza, the president told reporters, "I'll put a 200% tariff on his wines and champagnes and he'll join, but he doesn't have to join." France's benchmark CAC 40 stock index dropped around 1.2% Tuesday. U.S. government bonds also sold off, sending yields soaring. The yield on the 10-year U.S. Treasury bond hit its highest levels since August, and 30-year yields rose to their highest levels since September. A decision by Japan's prime minister to call for snap elections in that country added to bond investors' concerns. This uncertainty was compounded by the possibility that the U.S. Supreme Court could rule as soon as Tuesday on the legality of Trump's sweeping, country-to-base tariffs. When Treasury yields rise, typically so do mortgage rates and interest charged on personal loans, auto loans, and more. Higher interest rates could also complicate a domestic affordability push by the Trump administration in a U.S. election year. In recent weeks, the White House has deployed an arsenal of policy tools aimed at lowering the cost of living for American consumers. European officials say leaders will hold an emergency summit on Thursday to consider retaliating against Trump's Greenland tariffs, and that a package of more than $100 billion in counter-to-tariffs is at the ready. Some EU leaders have also backed deploying what's known as the bloc's trade bazooka, an anti-coercion instrument which was created to counter hostile states like China. "This is sell America again within a much broader global ripple effect," wrote Krishna Guha of the investment bank Evercore ISI on Tuesday morning. Guha was using a term coined in April 2025, after Trump rolled out a global tariff agenda with sky-to-high rates on dozens of countries. Fearing the U.S. was no longer a reliable trade partner, investors sold off U.S. stocks and bonds and looked to metals and international stocks to help hedge the risk. The sell-to-off likely would have been worse, Guha said, if investors were not optimistic that the Supreme Court will curtail Trump's tariff authority and that his administration will back off its latest threats of additional import duties. The impacts would be very severe if this goes off the rails, and there will be long to lasting implications, including for the dollar, wrote Guha. Citigroup's Scott Cronert wrote in a client note, "We are only 2 weeks into the new year and the number and magnitude of impacts on U.S. equity markets is already dizzying." Sergio Armati, the chairman and CEO of Swiss banking giant UBS, said, "I don't see any path to normalization in the near future. There is a limit on how many things you can put on the table without eventually one of them going out of control and then creating the kind of volatility you see now," Armati said during a CNBC interview at the World Economic Forum in Davos, Switzerland, U.S. Treasury Secretary Scott Bessent dismissed critics of the administration's latest moves and accused them of having gone into hysterics. The U.S. is a reliable partner, Besant told CNBC in an interview Tuesday. Everyone take a deep breath. Do not escalate, said Trump's top economic official. President Trump has a strategy here. Hear him out and then everything will be fine.